The chart right now is painting a picture that most retail investors are completely misinterpreting, and we need to address the elephant in the room immediately. As of this exact moment, Wednesday, December 10th, 2025, Rezolve AI, ticker symbol RZLV, is trading live at $2.71, down approximately 1.63% on the intraday session. We are seeing a volume of around 1.3 million shares exchanged so far, which is relatively light compared to the explosive volatility we witnessed earlier this week. The market is currently acting skittish, pushing the stock down from its opening of $2.76, and if you are just glancing at the red percentage on your screen, you might be tempted to think the sell-off is continuing unabated. But if you look closer at the order flow and the consolidation happening around this $2.70 level, the narrative shifts dramatically. This is the classic tension between expectation and reality that destroys novice portfolios and builds dynasties for the patient. The expectation right now, the loud, frantic noise you hear on social media and forums, is that Rezolve AI is diluting shareholders into oblivion to fund its massive $240 million acquisition of Crownpeak. The fear is palpable. Investors see the assumed debt of $150 million and the recent 10% drop, and they expect the stock to retest its 52-week lows near $1.07. That is the expectation. The reality, however, is significantly more nuanced and potentially explosive. What the market is pricing in as distress may actually be the growing pains of a company transitioning from a speculative AI play into a revenue-generating heavy hitter. The Crownpeak deal isn't just a purchase, it's an immediate EBITDA accretive maneuver that brings $70 million in revenue and a massive enterprise customer base into the fold. While the street is panicking about the short-term balance sheet, institutional money seems to be quietly absorbing the float, betting that the brain suite technology is about to become the backbone of global retail commerce. Let's take a step back and look at the broader context of what is happening here. When you look at Tesla stock or Nvidia stock during their most volatile early periods, you saw similar patterns: massive execution risks, polarized analyst ratings, and a retail public that was terrified of the downside while ignoring the exponential adoption curve. Rezolve AI is currently sitting in that exact friction point. The stock is down significantly from its 52-week high of $8.45, battered by the broader rotation out of speculative tech and into safer havens. But the fundamental engine of the company has never been stronger. We are looking at a company that is projecting to exit 2025 with an annual recurring revenue of nearly $160 million, a target that, if hit, would make the current market capitalization of under $900 million look absurdly cheap by software multiple standards. But before we dive deeper into the financials, we need to talk about access and how the average investor is approaching this trade. Whether you are using Schwab Intelligent portfolios to manage a diversified basket, or you are engaging in self-investing through an individual brokerage, the mechanics of trading a volatile small cap like RZLV requires precision. If you are using the Fidelity mobile app or the Fidelity trading platform, you might have noticed the bid-ask spreads widening during the opening hour today. This is characteristic of a stock undergoing a hand-changing phase, where short-term speculators are exiting and long-term accumulators are stepping in. For those of you utilizing Robinhood stock trading or the Robinhood app, you need to be particularly careful with market orders in this environment. Limit orders are your best friend when the price action is whipping between $2.66 and $2.76, as it has been today. The ease of online investing and the proliferation of investing sites have made it incredibly simple to click buy. But investment help is often lacking when it comes to understanding why a stock is moving. We're here to bridge that gap. Let's dissect the recent price action further. The stock opened today at $2.76, effectively flat against the previous close, but immediately faced selling pressure that drove it down to a low of $2.66 within the first 30 minutes of trading. This $2.66 level is critical. It represents a short-term support zone that was established during the frantic trading of late November. If RZLV breaks below $2.66 with significant volume, we could see a flush down to the $2.50 area. However, notice how the price snapped back up to $2.71.5 as we moved deeper into the morning session. That wick on the bottom of the hourly candle suggests that buyers are stepping in aggressively whenever the price dips below $2.70. This is accumulation behavior. It's what you want to see if you are bullish. It indicates that while the weak hands are folding, someone with deep pockets, perhaps utilizing Fidelity Wealth Management or sophisticated interactive brokers' trading algorithms, is defending that level. The catalyst for this entire week's movement is, of course, the Crownpeak acquisition. On the surface, spending $240 million when you're a small-cap company seems reckless. It reminds market veterans of the dot-com era excess. But look at what Crownpeak actually does. They are a digital experience platform used by massive global brands to manage their content and customer interactions. By acquiring them, Rezolve isn't just buying revenue, they're buying the pipes through which they can deploy their brain AI technology. Imagine having a revolutionary AI product but no customers to sell it to. That was Rezolve's risk. Now they have instantly acquired a massive customer list that is already locked into the Crownpeak ecosystem. They can cross-sell the Brain Commerce and Brain Checkout features to these existing clients with zero customer acquisition cost. This is the synergy that the algorithm-driven traders using SoFi Investing or SoFi Robo-Advisor platforms might miss because they are just looking at the debt numbers. Furthermore, the partnership landscape for Rezolve is arguably its strongest asset, yet it is currently being ignored by the price action. We are talking about strategic alliances with Microsoft and Google. When a company the size of Microsoft integrates your solution into Azure and incentivizes its sales force to sell your product, that is a validation that goes beyond hype. It provides a level of investment security that is rare in the penny stock world. The Brain Suite is now available on the Microsoft Azure Marketplace, meaning any enterprise using Azure can deploy Rezolve's AI with a few clicks. This frictionless adoption curve is what differentiates RZLV from the hundreds of other AI startups claiming to have the next big thing. And let's not forget about the crypto angle. With the Robinhood crypto enthusiasm returning to the market, Rezolve's partnership with Tether to enable seamless stablecoin payments in retail is a sleeping giant. Imagine walking into a store or shopping online and paying with USDT as easily as you use Apple Pay with zero merchant fees. Rezolve is building that infrastructure. Speaking of infrastructure, let's talk about the specific tools you might be using to track this. If you are on Interactive Brokers, you should be looking at the Level 2 data right now. You will likely see a sell wall sitting at $2.80. This is a psychological resistance point. The market makers are capping the price there, likely to accumulate more inventory before letting it run higher. If you see the volume spike and the price break through $2.80, that is your confirmation signal. For those using Fidelity ETFs or Fidelity mutual funds to gain exposure to the broader small-cap sector, you might wonder why RZLV isn't a top holding yet. It's because of the market cap and the volatility. Institutional mandates often prevent them from buying stocks under $5 or with a market cap under $1 billion. RZLV is hovering right at that edge. If the stock rallies to $3.50 or $4, it crosses a threshold where a tidal wave of institutional buying from Fidelity brokerage accounts and other major funds can legally enter the trade. This is the inclusion effect, and it is a powerful driver of prices. Now, I want to take a moment to address the brain technology itself, because this is where the expectation versus reality gap is the widest. The expectation is that Rezolve is just another chatbot wrapper, a company using OpenAI's GPT-4 to make a customer service bot. If that were true, the stock would be worth zero. The reality is that Rezolve has built their own proprietary large language model called brainpowa. Unlike generic LLMs that are good at writing poetry or summarizing emails but terrible at executing transactions, brainpowa is purpose-built for commerce. It understands add to cart, check inventory, process payment, and track shipping natively. It doesn't hallucinate a refund policy, it pulls it from the retailer's live database. This agentic AI capability, where the AI takes action rather than just chatting, is the holy grail of the industry right now. It transforms the shopping experience from a static scroll through pages of thumbnails into a dynamic conversation. Show me a red dress under $100 that can ship to New York by Friday. Boom! It's there! You can buy it in one tap. This is what Apple stock bulls have been waiting for Siri to become for a decade, and Rezolve is actually building it for retailers today. Let's pause for a second. I want to hear from you. The volatility in this stock has been absolutely gut-wrenching for some and exhilarating for others. Comment below